Hey everybody, this is David Skarica. So today we're going to look at Expedia and the travel industry. Yeah, yesterday I talked about the weak retail sales, Drunken Miller buying gold. So we're going to take a look at recently Expedia had their earnings and it really gapped lower on the earnings. And Airbnb is also warning of weakness. So we're going to look at Expedia today. I'm just getting the Yahoo Finance up, like press release on their earnings. 1 second. Um, yeah, actually, I'll get a Reuters article here that says the new normal travel companies temper expectations. Because one thing you have to understand is with travel companies, airlines, etc., we saw this huge amount of pent up demand after COVID. Okay, after everything collapsed in 2020, we did see a little rebound in 2021, but many countries still had restrictions, etc. I went to Europe in 2022. I still had to show them a proof of vaccination for both Spain and traveling back through the States, back to the Bahamas. I had to show it. I remember actually I was connecting. So I found a very cheap first class flight from I was in London the last part of the trip through Portugal, through Porto to Newark. And then there was a second tier of the trip from New York to Eleuthera, which connected in Charlotte. And I remember even boarding in Charlotte, I had to show my vaccination papers, which I thought was ridiculous because I've already shown them, traveling from Europe. I'd already shown them when I checked in New York, and I had to show them again connecting. So anyhow, so it was what I was trying to say. It was a pain in the butt still. Now last year, finally, all the restrictions were lifted in most countries, and so you had this pent up demand where people hadn't gone anywhere for years. People have made money in the stock market and in their houses, and they could finally travel restriction free. So I think like I said, you saw this pent up demand here. So anyway, we're gonna look at Expedia. So Expedia kind of warned, you see, it looked like the stock. This is why sometimes you got to watch technical analysis or what goes on. You can see Expedia really gapped up here, saying the fourth quarter would be strong, had this huge rally, and of course the stock market rallied as well from $95 to almost 160. That's a huge move, right? So 60%, and then had a huge gap down from 160 to 130. And now it's kind of bounced off after that gap down. So you're kind of filling the gap a little bit. So, and look at this happened here when you had a bad August quarter. They had this little bounce and then it kind of went lower into late October. So that's why as well. So I would expect usually when these companies have gap downs, they don't gap down and go right back up. Usually they'll need some kind of news, like Expedia's good quarter here to start going up. So I expect that Expedia will probably in the next 3 months kind of look like that quarter, kind of grind lower, maybe go back here to the 200-day moving average, which is 118 the share. It's sloping upwards, so it'll be a little higher, but or the whatnot. So and then it matters too if there's a stronger sell-off in the market, etc. So anyway, let's quickly look at this. This thing, Expedia's CEO said we expect travel demand to remain relatively healthy, but we expect growth across the world to decelerate. Marriott, basically said, basically, the top line performance is going to go up 3 to 5% this year, as 15% last year. Hilton said 2 to 4%. Yeah, again after 12%. So we're seeing a real slowing in the travel industry because obviously the comparisons get higher after you go up 15%. But remember, inflation is still at 3-4%. So 3 to 5% increase means you're basically seeing no growth after inflation. And I just think the combination of consumers being tapped out and we're seeing credit card delinquencies on the rise, that sort of thing. People have kind of spent all their COVID money. They've kind of maybe maxed out their gains in the stock market. How much higher the Magnificent Seven really going to go? That sort of thing. And remember, when I buy these beaten up companies, like the average investor does not own those. And I do a little private placement that goes up a lot. This is a very, very small section of the stock market, right? So it just looks like to me like the average U.S. revenue, this travel industry is kind of topped out, and that's going to weigh on the economy as well. So that's just kind of interesting. So I think this whole thing with Expedia, all the hotels, Airbnb is signaling there's going to be a slowdown in the travel industry. Now, I'm not as into shorting and buying puts as I used to be. my thing now is just raise cash and wait for stuff to get cheap, because it is very stressful to buy puts. But maybe some of these companies are worth looking at as shorts, because they're not very cheap either. But I may continue to look at it. Like, but again, when something gaps down like this, and Tesla did this on its earnings as well, I always like to see kind of like it work off that oversold condition a bit. Again, kind of like Expedia did here in August. Right? You can see here it gapped down from 120 to under 100, and then it rallied back to about 110 and then fell. So that, the time to short it was, you see the gap down, you're like, okay, would have been like in this area here. And then, obviously you wanted to get out probably before earnings. And the same kind of thing. So probably the time to short Expedia is, probably coming up now, because it's already seen this nice little bounce. So we'll have to see, but anyhow, the long story short is, it looks like the travel industry is going to see a significant slowdown here after kind of the post-COVID boom in travel.